Moving on to the second part of our project here, or mini educational series on how to trade binary options with the CCI, or the famous CCI, the famous Commodity Channel Index. And I would say it is very important to know how to apply it on the chart. We already applied it on the chart. As indicated or instructed, we should keep the 14 period there, and from this moment on we should look for a new way, let's say, or for ways to trade binary options. Now, like mentioned on the first part when we described the indicator and so on, it is important to note that the CCI, it is for, or in some trading platform it is being a trending indicator. In other trading platforms it is actually being, like it is here, a momentum indicator, but basically it is a trending indicator. One way to trade binary options with the CCI, and I will put here on the screen. So one way is to trade the zero level of the CCI. What does it mean, the zero level? Like mentioned on the previous, or on the first part of this project, the indicator is being offered with three different levels: 100, the 0, and minus 100. So basically the whole territory here is being divided in two different parts, one positive territory and one negative territory. Well, trading the zero level means to trade with the CCI in the direction that the market goes, and taking into account the time frame or the expiration date that you have here, or the time frame that the market appears or the time frame that the zero level is being crossed and the indicator is being placed there. We should engage into buying calls and put options. For example, again, this is the euro US dollar, and let's look at the move that we have from the highs here, from where the ECB at the beginning of May came and said that they are ready to act in June. So from that moment of time, you look at the CCI, you have nothing to do with price, and the CCI crosses the zero level here, where this is the moment where we would like to go and buy put options. Well, this is not the candle, but this is the candle, as you can see, goes in the territory, in the negative territory. So this would be a nice place to go and buy put option, this candle here. Then you wait for the CCI to cross into the positive territory, and it crosses into the positive territory. Well, this is a nice place to go and buy call options, exactly when market crosses. So not with this candle here, but with this candle here. Yes, it has a value of 13. And then of course you are interested into buying put options again when market crosses the zero line here, when market crosses the zero line. So actually we have two places for buying put options. One, the first place on this red candle, the second one on this red candle. And then you want to go and buy call options, and even here for all these moves you have two or three possibilities to buy call options with expiration date here, something like 4 hours still, or put options with expiration date, or on the break here to the downside, another put option. You have to imagine that trading binary options implies a percentage-wise rate of return. So you're going to be awarded something like 80% or 75% rate of return based on each and every successful trade that you have. Now that means that in order to make a profit at the end of the day or at the end of a month, you need that something like 70% or something like that of your options to actually expire in the money. So you cannot be 100% right, but what we can be, or what you can be, is to still make money when you are right something like 65 or 70% of the time. So one way would be to trade the zero level. The other way would be to trade, to try to look for extreme levels to come, and to try to buy call options or put options when extreme levels are coming. That means look for trade the extreme levels. What does it mean, extreme levels? Well, an extreme level goes like this. So let me say that this is the second option that we have. Trade the extreme level, and let me write here extreme means, so extreme equals values higher than 250, so higher than 250, and of course lower than minus 250. What does it mean? When the market goes that much into that direction, you just want and go and buy call options or put options. For example, here this is 237, this is 215. You may even lower this one here for the 200 level. And again, remember that this is a market that should go and give you 80% rate of return, more than 80% rate of return on any option that expires in the money. So all these moments here were nice moments to go and engage into buying put options here and call options here, extreme level. So from here to here you have almost more than 30 candles, more than 30 hours. So you have one day in which the market is actually oversold, and you can engage into buying call options. Here again, you may go and buy put options below 100, below 200 here. All these places are nice places to go and buy call options on the move. On the move, and so on and so forth. I think you already got the picture. And again, keep in mind 70% of your option to expire in the money, and you are on the right side. Thank you for being here. This is fairbinaryoptions.com, and all these analyses and recommendations are possible due to the help of our sponsor here, Lion Eye. Bye bye.